Thank you and welcome back at Markets Today. You're joining me and Caleb from Nebo Capital as we discuss commodities market. And he says that we are losing some investors, foreign investors in particular, due to high interest rates globally. And so they are going back to their countries to find haven. But at the same time, investments are being attracted in the commodities market, especially in oil, because the prices of oil have been going up since last year. And they are set to go up some more this year. And that is attracting. But before we move on, Caleb,
Yep.
I was wondering, what's pushing up the interest rates globally? Why is the Fed bent on pushing up the interest rate?
Well, they do have a twin mandate, one being employment and the other one being price stability. So in inflation rates in the US, I think were around 7% last year in December, and that's way above the target of 2%. So with high inflation, then they need to curb the amount of money circulating, money supply, and that's why they're also thinking about raising interest rates so that they're able to reduce that velocity of higher prices in the economy. And given that the economy is near or even is almost at I think it's almost at, or it has already even exceeded pre-pandemic levels of employment. Maybe just almost at. That also brings in the aspect of them being able to raise interest rates.
What percentage does it stand now, the base rate shared by the Federal Reserve Bank yesterday?
It's still at 0.25%. Anything less than that, and that's what they're looking to increase by 25 basis points in the next meeting in March.
So we'll probably look at 0.5%.
Yeah.
It's still comparatively low to the Kenyan one of 7%.
Yes, it is. It is quite low, though. Yeah, it is quite low if you compare. If you compare then comparatively to other advanced economies, we have Europe, Eurozone at 0. I think we have Japan at -0.1.
Japan is still at minus.
Yeah.
They're not in a hurry.
They're not in a hurry. Other advanced economy, I think UK is maybe at 0.5 or 0.25. So all of them are sub 1%, maybe even sub 0.5%, most of the advanced economies. So if you look at it comparatively, then the US raising interest rates still has a big effect across the world.
And it makes sense.
Yeah.
What do you make of the decision by the MPC to maintain ours at 7%? Isn't it time we just brought it a little lower? I know it's an economy, in election year, inflation, dangers of inflation are there, but dude, we've been here for too long.
Yes, the MPC has really maintained a wait and see approach. We've been waiting for a very long time for them to move. But also looking at the CBK's mandate, price stability, inflation. So they look at inflation, they look at credit growth in the economy, employment figures, and the like. So given that we are in an election year, there is a sort of push for them to ease conditions a bit, so maybe reduce the lending rates in the economy, as long as inflation doesn't run way above target, but it still is within the target of 5% plus or minus 2.5. So I think we are still at 6% or something. So we're still within the range. We're around 6%. So we're still within the range.
Sometimes I have a feeling that these guys, the only indicator they are looking at is the inflation and nothing else. So help us God.
Yes. Inflation does play a really big role in setting monetary policy globally, because you see the main tool that they do have as central banks is the central bank rate. So that is what they use to adjust all rates in the economy. So if inflation is running, we have runaway inflation, then they'll tend to tighten conditions, and they do that by increasing the central bank or base rate in the economy. So inflation is quite key.
Yeah, but
it affects
it
everyone.
shouldn't be the only one.
Yeah, it shouldn't be the only one.
Thank
Some
you.
have dual mandates, maybe inflation, employment, inflation, maybe private sector.
Ours, our single mandate. But let me tie in the discussion around interest rate, inflation, and the price of oil.
Mm.
Now that we anticipate that the price of oil will go up, isn't it then possible that the price of oil, the hike in prices of oil, is going to significantly affect inflation and by extension affect these movements around interest rates?
True. Thanks for that.
Locally and internationally.
When you look at it like that, what goes into inflation, we do have the price of oil, so that is the transport index. So the local transport index, we have the price of petrol, the price of diesel, and the price of kerosene. But the biggest weighted is actually the price of kerosene, because that is what is used by most households, or I'll say lower to middle income households, and that has the highest weight. So we have seen the EPRA, Energy and Petroleum Regulatory Authority, try to cap price increases. You know, the public last year really came out with, you know, every month increases, high. So they have tried to regulate and try to cap the increases, but it's usually just a temporary reprieve, because when you look at the price of oil, and you also look at local shilling, or the local shilling against the Kenya shilling against the dollar, if the shilling is also depreciating, then the prices of these imports is much higher. So you have the foreign exchange effect, and you also have the actual effect of higher crude oil prices.
Yeah.
So with that double whammy, to say prices of the local fuel prices should continue going higher, which will now feed into inflation, the transport index, which will also now generally increase in the inflation rate.
Yeah. All right. So much of oil. I want to perhaps bring it to the other commodities, and especially in Kenya.
Mm-hmm.
The commodities market in Kenya is considered by some a haven of crime. But, you know, on the other hand, it is a very attractive haven, quote unquote. What do you make of this?
For the haven of crime, I think we've had lots and lots of stories of people being conned. Basically, when you look at especially gold, I think gold, diamonds, Nairobi has I would say a moniker of being the conduit through which most of these minerals pass out of Africa into, especially the United Arab Emirates, so to Dubai being the
and even Saudi Arabia.
And Saudi Arabia, yes. So we have that moniker of being a conduit, and given again we barely have any gold. It's very small quantities gold and diamonds. So then how come there's a lot of rampant maybe conmanship that's happening within Kenya? Basically, it's I think it's a Africa issue, because you know, we are a mineral rich continent, and without the necessary infrastructures, without the necessary regulations, without the necessary controls, then a lot of people find ways of passing through, you know, the back end alleys to try and avoid paying taxes, avoid legitimizing, you know, some of these trades. So you make your commodity much more attractive, maybe cheaper, and you have a ready supply market for it. So in terms of being a lot of investors being duped,
yeah.
Unfortunately, I think it's also about doing a lot of due diligence. Who are you transacting with? Is this a registered company by the ministry?
Why is it so easy for these fraudsters to just dupe investors, especially here? I mean, what is wrong with the commodities market that makes it so easy for thieves to thrive there?
That's a very interesting question, but you see, it also goes back to human nature of greed. You see, because for commodity, it might be a bit easier to dupe me because I'll come with gold. Maybe I'll come with a sample.
And it could be fake.
No, the first sample usually is real, I assume. So I come with the first sample that is real, I test it for you. So now you as a common person, you wouldn't, if I brought two samples, one is gold and one is something that looks like gold, I can't remember what they call it, but it looks like gold. You as someone common, you won't know the difference, but someone will like try and go around and show you that this is gold and this other is gold, or test the real gold sample and give you a box of fake gold or something. So because of that, because you don't have the expertise and you don't want to legitimize it by going to, you know, authorized gold handlers, because maybe you'll find maybe you might be reported or a fee or something. Because of that, and then the margins that they talk about, or the margins involved, it makes the ordinary person be maybe consumed by greed.
Flabbergasted.
Yeah, you're flabbergasted. You're told if I sell this gold, maybe a bar or maybe a kg, it's in a kg, 2 kgs, like $1 million. So if we split that, you see, that's money maybe you haven't yet encountered.
I've only dreamt of. But listen, how can we make it safer for wealth making? So that then I know if I want to trade in gold, I can go to such and such a place and get authentic gold and, you know, buy it and perhaps store value in it.
I think maybe one of the things is to get away from the... You see, when you talk about gold, people start thinking like it's something very foreign. So there's a bit of anxiety, a bit of uneasiness, like, hey, this is gold, I might be nabbed or hit by the street. Because if you go to some place like India here, because India is one of the biggest gold markets, India and China, but India especially, you know, they even give out gold during weddings. You can go into a shop and buy gold. So the gold is more entrenched in their culture, such that either everyone knows how to distinguish real gold from fake, and it's so
because they've
common.
seen a lot of it.
Yeah, they've seen a lot of it. They've interacted with it. It's not something that is too foreign to them. So making it more accessible, maybe increasing the number of gold dealers, or making it less strenuous for someone to be registered as a gold dealer or as a producer, might solve some of these things. Because again, most of the people who also get conned, I don't think they use a lot of paperwork. It's just what I'm saying is someone might come and show you real gold, and then the next consignment is not there or something.
It's not the real thing.
Yeah, so just trying to normalize gold. So like if I go to a shop maybe to buy a ring, you know, there's that loss of security. You might be even going out with it, you look at yourself twice to make sure it's hidden.
I will not comment on your ring, whether it's gold or not. I don't want anyone following you after this. But I saw somewhere that there are Kenyans who buy sugar in bulk and keep it. And then when the prices go up, they release it as their way of, you know, investing in commodities. I don't know what your thoughts are on this, and perhaps other methods that your ordinary Kenyans can invest in commodities.
Well, you see, that one is, as long as they're not producers, because that one then we'll call it hoarding. But if it's just an investor, me and you, I'm speculating. So I'm speculating that, hey, the price of sugar will go up if it's something that can be stored. I can build warehouses for it, and then when price rises, I can sell. So as long as I'm not a producer, so I'm not really hoarding, then that is one way that I think is a legit way to
Actually, some of them do it with imported sugar.
With imported sugar, you see, again with the sugar industry, they're saying that imported sugar is much more cheaper. I think even just from Mauritius. So when you flood the market, the local sugar industry can't match the prices. So there's that too. But we are free economy. You know, everyone has their camp. Everyone has their camp. So as long as there are no controls, it's not a growing industry. Maybe it's not a nascent industry that we want to protect as ours. And it's for competition.
Well, absolutely. Other commodities we can invest in that perhaps we will not be followed after.
We are really good in horticulture. I think our flowers are one of the most sought after in European markets, especially when we come towards February, you know, the Valentine season. So I think that's another a good avenue in terms of commodities to invest in. We do have the greenhouses where you can grow agricultural produce, tea and coffee, though that's not as, I think this is not as attractive as it was maybe a decade or two ago. What else?
Why is that so? Is it because of our regulation?
I wouldn't say that I do have an answer right now on why the industry has declined. You know, there are a lot of factors that go into growing produce, rainfall, drought seasons, and we also have competition again from major players in the world. Like I know for coffee and tea, you have Brazil. So if Brazil are able to grow it on a very bigger, wide scale, the country is a bit bigger, maybe they also have more land and more farmers in that business, and they're much cheaper. Maybe if they're also able to grow it much cheaper, then the international market is flooded with much cheaper produce, so then your produce doesn't give you as much returns. Given that, again, most of this is for export. So if you're dealing in an export market, then you're subject to all global forces, exchange rate differentials, cheaper production in other countries. Like, you know, when China was coming up, you couldn't compete with their cheap labor. India, same, even now, even in Ethiopia. So most of the time, the goods created from those countries were much cheaper. Like remember when everything Chinese was very cheap.
Yeah. Because
of those controls, and then the government was regulating the exchange rate, so to keep their goods competitive in the market, given you know, you have a cheap cost base and whatnot. So for produce that you have to export, then you have no alternative. You have to fight and make sure that you're competitive at the end of the day by either quality or cost.
Okay.
Yeah.
Well, we've run out of time. I've really enjoyed the conversation, and I really hope that you'd make time to come again. Next week, I'd want us to cover Bitcoin and around cryptocurrency. Everyone is excited about cryptocurrency. Governments actually are creating cryptocurrencies that are legal tender, backed by law. So it's an interesting conversation we should have. Okay. Hopefully next week. Well, I think we've enjoyed the conversation, and yes, the commodities market is both a safe haven if you get a good commodity, and a well-regulated market, and a shark tank, especially if you're in Nairobi and you want to trade in gold or diamonds. Then you need to be careful about it and know who you're dealing with and how. I also know that there are segments of the agricultural commodities that when you're trading, you still need to be careful, whether it's sugar or maize or anything like that. This has been a constructive conversation, and I hope you enjoyed as much as I did. Markets Today continues tomorrow at 4 p.m. Do join us.